Hello everyone, I'm Giuseppe Basile. I'm also known as the Fib Stalker, and today is Sunday, November 22nd, 2015. In this brief video, I'm going to review the 14 markets I follow as I do every weekend, and this video can be watched and you will receive it in your email on Sundays if you are a subscriber to the free newsletter. If you want to reach me, you can do that on Twitter at FibStalker, as well as you can reach me by email, fibstalker@gmail.com. I'm renewing my website, www.fibstalkertraining.com. So if you go at the moment, you won't find a lot there. But I plan to complete this activity by the end of the year, and so we'll have a new website as well. So let's start right away and let's dive into the euro dollar. That's the first market I'm going to review for you, and I'll start as usual from the weekly time frame. And we know that we had this long-term moving measured move here from highs to lows, and we had participation already at 139, which progressed into the first target, and then we applied a very aggressive measured move here, and it failed, which means that at the moment this market, well, at the time when it happened, there was no interest from weeklies to push this market. However, as I'm going to show you in a moment, and as I showed you in the past weeks, the dollar index is actually pushing higher in a confirmed measured move higher into 105. So we should actually anticipate lower price for the euro dollar. When we get into the daily time frame, the euro dollar, we see that there is a basket setup that happened last week, actually was completed last week, and then price came and retested the same measured move here, the same using the same anchor. The anchor is the 109 here, and as you can see, price got into that level. It was initially respected, and then the market broke above this 108.15. This was a basket setup, went into the first target, and then zoomed again. So we could use the same measured move here to anticipate the participation at 107.59. So it was a great trade, and this market of course is continuing lower, and the first target now of this new measured move is going to be 105.51. The market is going to get there very likely at the beginning of the week, and there is a possibility of a continuation right into the previous lows at 104.64. Going to the S&P500, congrats to all who took the trade I indicated last week. This was a trade that was known well before the fact. You will remember that when the market moved very, very strongly here on this move higher, there were 1, 2, 3, 4, 5, 6, 7, and 8 days. 7 to 9 days when the market could actually, the next measured move could be anticipated. There was the highs to highs, and you can review my previous video, last week's video, and I mentioned that 2000s would have been a very good level to enter if the sequence of measured move on the opposite side would break on top of this level. That's exactly what happened, and I actually took a quick long here in this at this level, and it was a fast trade for me. Where this market can go, this market has the potential to go higher into the first target of this measured move. I anticipate though that we're going to see some retracement as we have seen in last October here, where we have exactly the same pattern. The only difference is that there was a V bottom here, while this year in August and then in September there was a double bottom here. So price confirm move higher. Next target of the measured move that we saw in play in August and October is going to be 2200. Dollar index confirmed measured move higher, as I mentioned before. So when we look at the weekly time frame here, we know that there is an extension after this huge move higher with hardly any retraces. We had a measured move that could be identified with 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in advance. And as you can see, this area has been tested once, twice, 3 times, 4 and 5. The 5th time the market is actually now continuing higher, and we know already where it's going to go. 104.85 and 105.90. We have an area of potential resistance there, so that's where we're going to see 105 area. that's where we're going to see the dollar index, and this means for the euro that the euro is going to continue lower and at least into this 101.15 101.50 level here. So the euro is going to go back to parity, friends, and that's what we're going to see in the coming weeks and months. Moving to gold. Gold, as we know, has been moving on top of this very, very large area of potential participation higher, 2012.32. The 10.58 is very, very close. This market has not broken that. Mind that if this level is broken, we could see there are two effects. One is fundamental, because the companies that extract and produce gold could actually sell future in order to kind of protect their operation. So we could see a continued move lower. However, after breaking, and if we break 10.58 here, we're going to see a bounce higher for some time, and I think could be quite sensitive if that happens, and could actually bring price to the 50% of the extension measured move. At the moment, we're still seeing this market moving lower, so there's not really a lot we can say about this market. For when it comes to silver, of course, silver, this is the futures. When we get into the daily, we know that silver is actually into a sequence of measured moves on the weekly time frame as well as on the daily time frame. So this market has targets below current prices. The closer target is 1240, 1250. That's where we could actually see price moving forward here. And when we change the scale, I think we can see very clearly that the next level, there are two levels here. One is the inner daily that saw participation 1, 2, 3 times here within this 1590 area. The 1640 was never pierced on the upside, and price is getting into 13, and after that is going to get into 1250. So that's where we can see price of silver. Silver is printing new lows here, so the possibility now to drop into those levels is very, very high. Moving to the weekly time frame of US dollar versus Japanese yen, very, very technical market. It responds very, very well. It responds very, very well to measure move here, and just to show what's happening in the past, this market has been very, very technical, and it's easy to anticipate what's going to happen in this market. When he printed highs, the market was clearly extended, so we traced an extension high to high, and the market after a few weeks went into the 94 level, tested it, and then went into the first and second target. And that's why we saw this market. Of course, within this large weekly move, there were dailies move that we could model as well, and the market has been moving since in extension higher, and at some point the next daily measured move is as traced as well, and it was tested twice. So if you lost it the first time, you could for sure trade the second time as well. And since then, though, the market has went into the first target, and we know that the next measured move long as tested. When was that? When the market came into in August here, when there was the August scare. This market came into the next measured move, and it's now continuing higher. So this market has targets above, so don't be surprised if you will see this market into 129, 57, 50 area, and into the previous highs in 2001. So that's where this market is moving. European versus Japanese yen is also a very interesting market. We had I reviewed this market also in my webinar on Saturday. If you're interested and you want to learn how algos actually control modern markets, high volume modern markets, you want to subscribe to the Fixed Camera Coaching program, which is a 7 months program where I gave all the details how these markets actually move or can be modeled using models for modern algorithms. So we saw price participating in this 119, very similar to the US dollar to Japanese yen. Then the market went into the first target and into the second target as well. And so we modeled the participation, which came timely at this 136.60, and then price went into participated this level 3 times. The fourth time busted and went into the first target, and then we had the typical behavior when these measure moves are busted. So what we know about this market is that in 122 there is the participation. At the moment, dailies and weeklies are pushing this price lower into that 122, and in fact we saw participation a few weeks back to the 136.69, which has first target very close. This week we are going to hit that target 130.19, and then after that there is the potential for this market to just continue into 126.82 to trade at the previous lows. That if that happens, then you're gonna keep modeling these pricing extensions. Remember, we don't know whether it's going to get into 122, but we know that in 122 there could be participation from weeklies. And similar situation for the pound versus Japanese yen. We saw participation this time last week, for this market last week on the weekly. We saw participation of shorts as soon as the market got into the all the way halfway back here, 188.18. We know this market also has a bearish bias, so at least it has to retest one level that actually has been tested in back in April here, 174.90. So that's where we're going to see the market to get into. Because this market has to, if it continues lower, it's going to retest. It's going to retrace 90% of its move and retest the 174.84. As you can see, the target of this next measure move is very close to that level. It's 176.90. So if the price gets there, the price is going to retest for a dangerous second test to 174.84. Moving to the pound versus US dollar, this market too very technical. This market has been trading in extension shorts here now for some time. We have shorts on the monthly, on the weekly, on the daily. If you look here on the monthly, there was participation within this 161.65 area. Then the market moved lower into the lows in April, and then there was this rally, and the market stopped right at that 50% level, and that happens very often. So we know that these 50% levels are participated by algorithms, so you always have to look at them. Of course, I don't just short these levels, because I want to know what the opposing sequence of measured move is. When it breaks, that's a safe place to short. So when we look at this market has been shorted on the monthly, shorted on the weekly, and recently has been shorted on the dailies as well, because we saw participation here from levels, and after the fact we could for the first text we could identify the next measured move, which was tested once and twice, and so this market is now being pushed lower into 149, and has the potential to continue lower as well. When we move to the daily here, and I'll briefly and quickly adjust the scale, we can actually see that double participation there. Of course, when you go to the dailies, you can see that you have much more time. In this specific case, you had more time at the beginning to get involved in this trade, and the market also came last week to actually trade the next measure move here, which was busted. So there is a possibility for the market to now get into 149 and then bounce. So we're gonna see, possibly we are gonna see a move lower into this level, and then a bounce again into same anchor, new low here. So it's very possible to see a move into 149 and then a bounce into 152 here. That's what the market is telling us at the moment. Okay, so this market is continued lower with shorts on the monthly, weekly, and daily, so there's no reason to get long in this market. For the Australian dollar versus excuse me, versus the weekly, sorry, the US dollar here, the weeklies have been pierced here, the large measured move. So this market has still a bearish bias, and of course we have seen a reaction here, a potential reaction. This reaction has actually was respected, then pierced, and now is being respected again at the open. So there is a possibility for a continuation lower here. And as you can see, also the bulls are not capable of holding this price. So this market is moving laterally here within this 250% level, and will resolve either on the upside or on the downside. So if we see 71.45 being respected this week, be on the lookout, because there could be a bounce if the market is going to continue higher. Sorry. Otherwise, this can be a short that can be timed right here. Moving to the New Zealand dollar versus US dollar, the situation is completely different here for this market, because this market, although has been trading shorts here, is still on top of very large area of potential participation long, and that's the reason why we saw this participation at 0.6370 here. So on the opposite side, there was a short that we identified after the fact, not before the fact, after the fact. I always like to, although this was another bull anchor here on the weekly time frame, I was not able to identify that before, so I always mention when I identify the levels before or after the fact. Of course, before the fact, it's much more useful because we can obviously trade them. So at the moment, this price is being pushed lower, and it could get into 0.6370 again, and then bounce and trade higher. Or this wall area of potential participation long here could be in jeopardy, and we don't know that. So if this price actually bounces and gets into the next measured move here on the daily, which has not traded last week, if it goes higher into 0.6658, that's a short. You can try to bring price into 0.6370 or 0.6320. Next, US dollar versus Canadian dollar, and this market has been on fire, and again we were able to identify the sequence of measure move higher here with a few weeks in advance, and 1, 2, 3, 4, 5, 6 weeks in advance. The high to high identify this area 120.62, and then price of course went into the first target. As you can see, the reaction at that first target clearly indicates that there is participation from algorithms the first time here. Of course, this is an extension, so it has the potential to go all the way into 138, and there was a nice trade here as well. I didn't take that. I had a few students taking that trade, and there was a traditional measure move here from 130.57 into the first target, and as you can see, I received a couple of messages from some of the students, and they just took profits here at this 133.85. What is this? This is a measure move that started at 130.57 and 133.85. It took a couple of 2-3 weeks to get there on a daily time frame, but when you're able to get this kind of swing trades here, there are very good profits to be made. So euro versus Canadian dollar, on the other hand, this market is has been going back to its previous highs basically. So if we look at this market, this has been very technical, and in this move lower, as we can see, we saw participation there, we saw participation again, despite the break there, and then the market basically broke the back of the long-term bull here. As you can see, the market went below that level, but then there was a reaction higher into previous highs and the market actually broke the back of the bulls as well, sorry, the back of the bears as well, when the market actually broke above the 61% level. So this market is moving laterally, obviously, but in this lateral move, of course, there are a lot of opportunities. For example, on the way up, you will remember that on the way up, I mentioned well before the fact the all-the-way halfway back retrace here. So price got into this 135.93, and then we got into the first target, and we didn't know it, but this market went also into the second target. Opportunities are also on the short side here, and the opportunity on the short side are very good. I'll go down to the daily here, but there were very good retraces into the 50% level from the highs we saw in August to the lows here. You can see that there was participation, clearly participation at this level. The market went into 150.85 and then it was pushed higher. Then it took 2 weeks and a half more to get into the level 150, and then it was pushed lower again, and it went to touch the first target 3 weeks ago. And within that move, there were other moves as well that we monitored. For example, there was the participation short at 148.53, which was tested 1, 2, and 3 times here and broke price into that same area. And now the price also got into the second target of this smaller measure move. And that's the reason why we are seeing some profit taking here, which is pushing price higher. And again, when the price got into this level, we saw that move higher showing profit taking. So that's the reason why you see this kind of price behavior. So from on the daily here, on the daily, we also saw the next measure move trade already, which is this sequence here, and this could be anticipated before the fact, with 2 days before the fact, 143.50 here, 50 level, which is actually keeps pushing price into the first target 140 here. And that's the reason why we could see price getting into this 140.20, 140.50 area, which is the area where the second target of this largest measure move is as well. Last market is US dollar versus Swiss franc. Of course, we're seeing this market moving higher because of the strength of the dollar index that I showed before. The dollar index is in a confirmed move higher, and this is going to help. In a way, it's going to help the stock markets, and it's going to go against the euro as well as against the dollar and against the Japanese yen. That's what we're going to see, what we are seeing at the moment. When we go back to the US dollar versus Swiss franc, of course, this market is on fire at the moment because it is actually directly influenced by the dollar index and what the dollar index is doing. So you will remember that we saw this measure move here 0.9290 area, which was initially broken. 90.09 here was broken on the downside, but then at some point this level has been respected. Of course, this market was in a lateral move, so bulls and bears both failed. At some point, I should say bears start failing more than bulls, and you could see here participation at this area from bulls, which actually broke price into into much higher level here. So where this market can go, there are a number of targets that you have to keep in mind, and the first most immediate target is 105.22, but then there is also the target from the largest measure move here, and that target is 109.110. So that's where we're going to see possibly this market. All right, and this is evident for today for the newsletter. I hope you appreciate this. If you want to learn more about the way I look at the market, by no means, drop me an email, fibstalker@gmail.com, and I can provide you with additional information. Thank you very much, and have a great trading and non-trading week. Bye-bye now.